Greetings, Jedi traders. David here of TradingFibs.com to bring you the daily trend recap for August 20th, 2015. As always, please seek financial advice when trading with your money, as these videos are for educational purposes only to support your knowledge in the market. See what's going through my head on any given day. Always make sure you have a solid trading plan and always manage your stop when placing a trade. Well, post FOMC, what a day we had yesterday on Wednesday, August 19th, leading into August 20th on Thursday. Post FOMC was the overnight session, as we could see, jumping right into the big picture on the four major indices. Here on the TF, on a 100 tick range chart, you can see the TF already was in a downtrend. On a 100 tick range chart, as price action crossed over the T3 moving averages and the 534 being downside, and in conjunction with a 4-hour chart rejection here prior several days earlier, unable to break above that 144. We've just been in a nice long downtrend on the Russell ever since, actually back in around September 23rd, July 24th there. And combine that with the Fibonacci extension, as price actually, you could see, reached all the way down to fib target number 2, leaving an open gap to the upside. As we could see here on the Russell, it was all biased to the downside. And we'll see here in a minute how, looking for the entries on the intraday to the downside, had a higher probability of being in trend together with the big picture. So we'll go ahead and pull that together. But just let's appreciate the big trend here for the TF was all downside, as looking at the 100 tick, the 4-hour, and the daily chart. Same picture on the YM, as we could see price action was already downtrend overnight session, crossing over on the T3 moving averages on a 100 tick range chart. Rejection here at the 144, 50 below the 144, representing bias in the market to the bears. As price action, you can see here, ended up, we are in a Fibonacci extension draw all the way down. We can see already it had hit the 161.8, bounced back up to a former fib level, and then broke right through today, leaving an open gap. Let's jump right into the other two indices, the NQs. We could see cross action breaking to the downside prior, and also again similar picture on the 4-hour chart here with the 5144. The 5144, so bias still to the bears, and you could see the Nasdaq finally breaking some upper extension levels and finding support actually here at the 200 period moving average. Looking at the ES has been nothing but chop here on the Fibonacci levels, finding support at the 200, finally breaking today on the 200 period moving average. And as you could see, prior to market open, there was FOMC yesterday, but 50 below the 144 here, even though price action just hugging there for at least a week or two, and finally breaking downside, 50 below 144, and the T3 moving averages to the downside. Now, how does that play out? On an intraday? So let's jump right into the Russell here. And actually, before we do that, let's get right into the market profile. Before we do that, we can see that price action here resulting today with a value area upside. YM had a nice bell curve to it, both sides of the outlier, value area being in the middle. Here's same picture on the NQ and ES. And what I actually want to point out in the NQ here for a moment, let's look at the NQ market profile as we see price action closing out three former points of control. And if any of you caught one of my recent articles here at seeitmarket.com, I had posted the fact that on a market profile, what I was paying attention to is the fact that just this was back on August 6th. Today being August 20th, we had 3 open points of control today, and I had stated in the article today that price action already in the bigger picture to the downtrend, even though we had a pullback, as long as price action on an intraday was forming to the downside, here on the sell signals crossover, this was in line with the bigger trend, we were going to go ahead at some point and finish up unfinished business down here. And it's exactly what the Nasdaq did today. Here we could see a lot of side action, but eventually the Nasdaq came all the way down here on market profile closed out 1, 2, 3 points of control. And as it stands now, even though we have several points of control to the upside, we have taken care of unfinished business to the downside. So without having any future thoughts about what might happen, again, this market can continue to the downside, but now we have unfinished business upside, and the market eventually will rally. When that happens, I can't tell you, but I know that at least the NASDAQ has come to the downside and taken care of those three lines. So, again, let's jump into, here is the Russell here today. As you can see, it was a lot of chop action here in the live trading room. And you'll notice here that on the top bars, we obviously had a lot of chop action represented by the alternating greens and reds. The middle bar here represented by the 534 exponential moving average, and the bottom row represented by the 5144. As you can see, the bias for the whole entire market session was to the downside, 5144. So if we go back to starting here on the Russell, look at the big picture. We have a 100-tick range chart showing a downtrend. We have a 5144 on a 4-hour chart downside. We got a Fibonacci extension set up to the downside. So the bias right now is to the downside. When you go to the intraday chart, all right, this is a 10-tick range chart. These are Flex Renko bars, Heikin Ashi bars. Any move to the downside, to me, has a higher probability of success because it's in line with the higher time frame. The higher time frame bias to the downside. Now, add in the 50 below the 144. Add in the fact that the higher probability was on all the sell signals with the crossovers to the downside. You can start counting them up. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 setups all to the downside in today's action. Now, it doesn't mean that all the sell signals with the crossover was a definite entry. I would have taken it. I had other market internals I was watching. But 13, and obviously you could see the better entry started a couple hours post-market. A lot of chop in the morning session. But as the sell signals just became longer, this was an awesome opportunity to manage it to the downside. As the 50 was below the 144, you could have simply just managed it on the way down. Now, wouldn't it be incredible if you could have simply taken an entry at the high of the day and said, look, the bias is to the downside, I'm just going to ride it all the way down. That's right. Just stay on the trade, right? It didn't break. Let's go to the 5-minute charts. Here we have the 5-minute chart on the Russell. We could see market action shot up here to the 25-minute open range high. The overnight high was over here. Daily gap was up above. We never broached that. And you got your overnight high here at about 11.78. Price action just kind of chopped at it and eventually gave way. So, again, you could have taken your short knowing that the bias was to the downside, but that's not how I trade. I look for the intraday setup, but being that the bias was to the downside, eventually an opportunity as we broke down below each level all the way down to today's low, which was a nice drop in the market here on the Russell. So combine that big time frame. All right, here you go, Russell, big time frame downside. You got the break 50 below the 144 on a 4-hour chart. You got a Fibonacci set up to the downside. All right, now combine that with the 5-minute chart, macro view. You know where price action layout is. Now, you could have taken the initial entry at the high of the session here. You don't know it's to the high of the session yet, but you know that the bias is to the downside. And then you take a look here at the Russell as it can, from the market open, each signal to the downside on a sell crossover was a great entry that would have gotten you ticks. 1, 2, and we counted up to 13 moves. Combine that with market internals, that tick count was running, or the AD line was downside, the 50 was below the 144. Again, a lot of chop action, could have gotten in and out a lot. Or, again, for the trader that wanted to sit on this all day, was an opportunity to take any of these shorts, place the stop at the high. Again, you probably would have been stopped up here, But if you had gotten in another short, simply place the stop up here and just manage it on the way down. All right, let's jump in. Let's take take a look at the YM here. The YM again, same picture, unable to ever get up to that daily gap. Price action chopping sideways and eventually dropping down. All right, what was the bias on the YM? Remember, we had downside, 100 tick range chart, 50 T3 moving average broke to the downside, and look where we ended up. Actually, we ended up holding up here at the monthly fib, 16,764. All right, 5 below the 34 on a 4-hour chart, unable to break the upside and bias to the downside with a Fibonacci extension set up to the downside. All right, you combine that with your 5-minute chart, know where your lay of the land is here in the price action as it started out, kind of shuffling around the cam low here, but again, a gradual choppy way on its way down. Again, today nothing being smooth today. It was all a lot of chop here. Here was the TF, here was the YM, similar picture. All right, here was market open, bounced, came up a little bit. Let's go ahead and slide that over so you can take a look at that. All right, there was market action in the beginning, 930 to the downside right there, sell signal. You could have taken simply, if you know the big picture is to the downside and never was really able to break that overnight low high, right there, 1707 was the high, the overnight high. Let's go back to the 5-minute chart, the overnight high on the YM here. All right, there was the open, the Globex low, and the Globex high was actually, I think, way above here. Let's take a look. There it is. Globex high was 17,320. We never even came close to it. So the high of the session already here set as the 25-minute open range high. All right. And price action again, what was I looking at? Look at the bias for the entire market. 50 below the 144 on an intraday, not a 4-hour chart. Okay, remember the 4-hour chart over here showing the bias to the downside, but what we're looking at an intraday 50 below the 144. So bias to the downside, you got a sell signal here, a crossover or a sell signal. This is the better of the setups as 50 was above the 144 here. Not that I would not have taken this trade, but this was a better setup. That was a better setup. Now I would have been stopped out of this. All right, re-enter, place my stop at the high up here, and eventually all management to the downside. At this point, the 50 below the 144, my tendency is to want to stay in the trade a little bit longer, knowing that the big picture is still to the downside. But that's not how I traded the YM today. My style of trading the YM was an in and out strategy. In and out, or one off at 7 ticks and one runner on, and see if I can get price action to continue. Obviously, several times I was stopped out, but very successful day, even on the in and outs with the chop action. Today was a great session to show in the trading room how price action, even in a choppy market, can be successful on the sell and the crossovers. Again, I'm looking for sell X to be together, or taking the counter trend with the B and the X together. But again, I was looking for the strongest move of the session, which was the S and the X together with the 50 and the 144. And the bigger picture, knowing that that was to the downside. All right, let's go ahead to the last two. Let's wrap this up with the NQ. We know what the we already talked about the NQ closing out business below, right? Talked about the 200 period moving average here at 43.81. If we go back to that market profile, remember what we said in the market profile? We had unfinished business below, which was right here around the 200 period moving average. How about that? NQ coming right down a little bit below, but as stated in the article back on August 6th, unfinished business before this market ever continued upside. All right, so let's take a look at the 5-minute chart on the NQ. Again, same picture, unable to break to the upside, never reaching the daily gap. All right, Globex high slightly above. Price action continued all the way to the downside. Again, could have simply taken on the NQ. That's right, could have taken on the NQ, the high of the session, and simply wrote it down. Or, look at that, 50 below 144 was the bias on an intraday, so any entry to the downside and a sell signal crossover, sell signal crossover, sell signal crossover. All these, it was a very choppy, but some of these rode very nicely to the downside. Some you only got maybe 2 points out of. Some you got a little bit more. Obviously, at the end of the session, all four market indices were on a rip to the downside with a tick count around 700 in the negative, put you into the trade to the close. All right, so wonderful setup on the NQ, and let's wrap it up with the ES. We know what the ES has looked like lately, but again, the bias had shifted to the downside, and fib extension now not getting much support back to the upside. Again, we've broken now the 200 period moving average on a daily. All right, looking at the 5-minute chart, let's go back to the 5-minute chart on the ES. Same picture as the other indices, unable to ever break up above the Globex high of the session. All right. There it was all the way up at 2077 daily gap, unable to close that, and market action breaking to the downside. So taking a look here, we could see price action on the ES. Again, break action upside, but it was the sell signal that had the higher probability. So again, this is a nice signal just combined with the 534, but my higher probability trades were the ones that were going to be combined with the what? That's right, the 5144 down here on the third row. T3 moving averages crossover, 5 below 34, and in trend with the 5144. Could again, once again, for those that put their stop far enough, could have remained in the trend the whole entire session, or look for the sell signals. Those were the higher probabilities. Again, you can always take a counter trend on a buy cross, but it was the sell signals to the cross to the downside that have the higher probability of a win. Now, looking ahead, once again, T3 market profile, we could see that we have left now on all four major indices. We have open points of control upside, including a major open gap that we just left on the price action opening up in today's session on Thursday, August 20th. So daily gap up above, plus now open points of control. And once again, we look at the bias in all four indices. Where are we sitting? We're still sitting to the downside. So whether this continues to the downside, all right, and eventually a turnaround in trend will show up on a smaller time frame, we'll look for the probability on an intraday as we see a change in trend on the bigger picture. So that concludes today's daily trend wrap-up for the four major indices. Feel free to stop by at tradingfibs.com or any of my social media outlets to obtain more information. My trading mantra is one simple strategy. Any market, any chart, any time frame will keep you disciplined. You can find me every day on Twitter at TradingFibs. And as always, I leave the crystal ball to the experts. I only trade what's in front of me and on my charts. Have yourself a Blue Zone day, good night, and good trading.